Stock Markets Outlook 2024. That's what we've been discussing with market veteran Manish Chokani. Before we went to the break, Manish, you gave us an idea of stocks that still have value and where, value has been replaced by vision. But for the market as a whole, what may be the red flags?
See, markets always will fall or correct on external factors. It's never that a company individually can disappoint and take the whole market down, or one sector can take the whole market down. And the risks are actually fairly well known to most observers of the market, that the mothership of all equity markets globally is USA. The US market has been very, very narrow for a long period of time, where the so-called Magnificent Seven are ruling the roost. And you can see chinks in the armor of at least 5 of those 7.
Which are not AI stocks.
Like Apple is already been declining in quarter on quarter in terms of sales. So it's still growing, but it's not something which should be holding a $3 trillion type market cap, which is close to our entire market cap. The issues which are facing Alphabet, which is at the risk of disruption from AI, plus the regulatory pressures on them. The issues which are arising in Tesla, and especially now with the way the Chinese have come up with BYD and others. So I won't elaborate all of them, but other than say Nvidia or Microsoft, the others could be at some risk of disappointing the market. And when typically something like that breaks, it causes a steep correction because the risk off trade comes in, and that risk off then naturally comes and affects us far away. You also know the way the G7 have been running such loose, irresponsible fiscal policy. The UK to me seems to be the canary in the coal mine, that they've broken away from EU. They have a terrible trade deficit. They have a terrible fiscal deficit. If anyone were to rate them the way they rate India, it would not be investment grade.
It won't be investment grade.
But that currency has not moved. Like the Japanese yen has gone down 50% in a year, but the pound sterling hasn't gone. And the US, every time they raise the debt ceiling, they're at $35 trillion of debt. And that can't hold the reserve currency status forever, pulling wool over everybody's eyes and just printing their way out of trouble every time. So already you see the signs from the Chinese and the Russians and the Saudis saying we don't wish to participate over here. It might take a bit longer to break, but you need one bond market failure or one blow up of a bank, which, with 4-5% interest rate hikes, someone has taken big losses somewhere in the system. And it can't be one Silicon Valley bank which has blown up. It can't be that the Fed is holding all the losses over there and there are no consequences. So something like that breaks. How it breaks, I don't know. We all know the issue of what happens in East Asia if China decides to flex its muscles, now that the US is out of its arsenal supporting Ukraine as well as Israel. These are unknowns. But if they come, they can put a light under our sanguine Goldilocks scenario to our markets. Even domestically, while everything looks pure blue skies, we know there is the, post this election, and we are all assuming there'll be continuity of policy and direction and government and so on. But when these new seats have to be recast between North and South, there's the Uniform Civil Code, there is the CAA, there was agricultural
so there can
reform.
Be social disruptions.
So we saw things which happened which put sentiment back. It doesn't change the underlying fundamentals of the country, but currently, see, we are pricing ourselves for clear blue skies. Everything will work as we want every month for the next few years, not just a few months. So that warrants some caution. But again, like I say, a bull market exceeds your expectations on the upside, the way a bear market exceeds on the downside. So I still personally believe that in this decade, India is a big economy in a sweet spot of the type which may cause a gigantic bubble to emerge here, like we saw in Japan in the late 80s. We saw in China, and therefore it's not only about economic performance, it's about how the market prices that economic performance, which determines your long-term returns. So I'm hopeful we don't cause a bubble, and we do get these minor shocks from time to time, so we kind of go up gradually climbing a step rather than taking an elevator up and then the elevator down.
Absolutely. Actually, you were explaining to me the China-India performance from 2008 to now.
I mean, China has been the best economy of this world for the last 20 years. And if you are a stock market investor, your returns are zero. Because
from 2008 to today.
Yeah, even 2000 to 2023, because the last 2-3 years have been so terrible, they wiped everything out. And they had 2 big spikes in the interim. I don't know if you can pull up charts and put them
we
up.
are showing the charts.
But if post the 2008 crisis, they spiked. In the mid 2010s also they spiked. And that's the creation of the Alibabas and the Tencents and all of the world, while the rest of the market suffered. And China is cheap. China is less
China
than,
is cheap,
it's
absolutely.
less than half of GDP is the market cap of China. We are
So
probably
you
at 1.25.
see that as a competition taking away money?
So it's a very consensus trade in the world to avoid China at all costs and be overweight India. There are no investment committees in the world who would sign off on putting fresh money to China. And the market doesn't just turn when it's cheap. The way I'm saying, our market won't just turn because it's expensive. You need some catalyst. And in China, until the locals start getting confidence to come back in their market, because they are so nervous with the money they've lost in property as well as in stocks, and with the regulatory changes which come unexpected.
Oh, yes.
So the mood is very, very, very negative. So value buyers are fishing there, and stocks are really cheap. I mean, I can't begin to tell you how cheap stocks are in China.
Okay, so that's something.
But if you look out 3 years from now, will the Chinese market be double? It's probably a good bet to take. I can't say that for India, much as I'm patriotic and I'm fully invested here.
Yes.
But we've paid a lot of price.
Yeah, but then there is a political risk also in China,
absolutely.
which perhaps foreign investors are worried about.
Yeah.
No, let me come back to India and to stocks.
Sure.
You know, the Zomatos, the Nykas.
Right.
I mean, what's your view? Are the digital e-commerce, the tomorrow stocks,
Sure.
worth an
No, they're
investment?
great businesses. They're run by very, very competent people, and they've delivered and executed very well. They've virtually become monopolies, oligopolies, or call them what you will. The pricing, as a value guy, I find it hard to digest that I'm paying pretty much for 10 years of perfect execution, no competition, rising margin profile. It's a hard bet to take. But can they deliver it? Can they execute it? Yeah, I mean, sure.
But I'm going to make money after 10 years.
Well, I don't have so much money that I have to worry about what I've missed. And one thing I've learned in the market, you don't ever have FOMO. If someone's making it somewhere and they understand, they are justified the returns they make. If I understand something else and I can play over there and make my adequate returns, we should be happy with that. And that's all I would say for most investors. We can't have a circle of competence which covers every stock in India.
Absolutely.
You know, go where you understand. Valuations, to me, all I've learned in life is my ability to predict is very, very bad.
Okay.
So my only defense
really
is
humble.
buying cheap. No, no one knows it, right?
Yes.
You could be president of United States and you don't know what's going to happen. So no one can predict the future. Your only defense, as all the gurus, Buffett onwards, have said, you buy at a price which is so good that you then don't worry about all these external risks and, you know, a funny person coming and running the company and so on. The price what you pay is really what determines your returns.
You discussed the PSU banks,
Sure.
or even banks, even private banks, in that vein, that they're not overpriced.
They're not at all. I think they're
all.
still very, very solid returns.
Anything
today,
else?
on scale?
Anything else?
So it's a rotational bull market. So from time to time, you know, things fall off the radar.
Like pharma, Kim.
Like pharma, for example, last month was a dog sector and it's been performing very well. So like it will happen in this bull market that certain times it's, you know, the defense and railway stocks are leading. EMS, for example, was something we spoke about
what about
a lot
EMS
last
actually?
year.
Since the government has put its might behind
it's a complete white space sector today, and I've often given the analogy of it being like the Maruti moment when Suzuki came into India and it changed the whole automobile sector. Same thing when GE came to India, they changed the whole IT services sector.
Yes.
The whole ecosystem is going to get cast with the coming of Apple in India. Apple's on a $10 billion run rate from India. Their ambition is to be $100 billion. The entire ecosystem is being made. We are still at the very bottom end of the value addition chain, and I know very famous people talk very dismissively about that we are screwdriver guys. You start like that. You don't reach the top of the semiconductor chain straight away. Design and the machinery making is very, very far away, and these are consolidated global businesses. But assembly, packing, if you don't make it, you'll have a big import bill. So it has to be done in any case. The industry is still very, very small. Valuations are fantastic. There are 60 multiples, 50 multiples on FY25. So you must be a real believer because these are low margin businesses as well.
Yeah.
So their ability to deploy capital, produce those returns in a modular fashion rather than, you know, whole hog, it's not easy. Okay. And there is no easy return in this market. Let's be honest about that.
Great industry, great business, but
there's a
are
price.
you buying at the right
There's
price?
a price for everything.
Okay, now we have a budget coming in. I mean, it's a vote on account and then it'll be a full budget. What's your wish list?
See, budgets, fortunately, they've made it a lot of a non-event, which is the way it should be. But when a new government comes in and a third term, and presumably it's a very strong government, there are a lot of big policy things which I guess are waiting in the arsenal, and one would love to see that happening. For example, from a financial sector perspective, we've missed privatization for many, many years.
Yes.
The market's giving fantastic valuations. It wants something to give the supply to cool off. So that would be one immediate thing. Again, from a stock
and it will
market,
benefit the government.
it benefits everyone, and it creates fiscal space for you to continue your capex expenditure, which has been one of the basis of this entire bull market. What we've done on infrastructure, railways, ports, airports, absolutely fantastic and stunning, and more power to them. There's been asked by no less a person than Uday Kotak to please stop taxing our dividends twice. That's all we live by. Don't tinker a lot with capital gains tax and change the mood of people. That's on a very sort of selfish financial perspective.
For all of us.
But as a nation, I think we've not fixed our energy bill for years. So not having enough of drilling happening, even the nuclear deal which was signed in Manmohan Singh's tenure, it's 15 years later, has still not kick-started. China is building nuclear reactors, small ones, by the dozen. And we will need a lot more energy and fuel to not hold back this economy from growing. We already have a power shortage as we speak. So that has to be fixed. A lot of our FTAs, which have been pending for very long, like Bangladesh exports a lot more textile than India, and we are the natural beneficiaries of that. A lot of those are pending to be signed. If they can get accelerated and signed, becomes dramatic. For local manufacturing, which we are also bullish about, you need this labor reform to happen. You need a lot of this agricultural reform to happen so that industry can take space. So there are lots of things which are out there, apart from what Sanjeev Sanyal talks of, the boring process reforms, judicial reforms, because what Manish Sabharwal calls the regulatory cholesterol has to be removed from our system. So there's a lot of work always to be done in a country like ours.
And one hopes.
But we live as optimists because things are in the right direction and they can only get better.
Okay. Now, Manish, I'm being warned we are out of time. So now the most important question for me. I believe your big hobby now, or maybe your mainstay now, is music. I mean, you're not so much in stocks as much as in music. So you have to sing me a song.
My gosh.
No, I mean, you've given, there is a YouTube playlist.
No, that's just for my friends and family, which...
No, I heard one of them. So now please sing for us.
Well, given it's the new year, I'll sing you a few lines from a very favorite poet of mine is Gulzar.
Okay.
And I sing his old song, Dil Dhoondta Hai, Fursat Ke Raat Din, or I sing Tum Pukar Lo.
Okay.
But for the new year, the appropriate song would be Aane Wala Pal.
Oh, okay.
Jaane Wala Hai. Ho Sake To Isme Zindagi Bita Lo. Pal Jo Ye Aane Wala Hai.
Golmaal.
From Golmaal, that's right.
Please.
आने वाला पल जाने वाला है हो सके तो इसमें जिंदगी बिता दो पल जो ये आने वाला है. I think I should pause
Excellent.
That. Or you'll get everyone switching off.
No. That was a brilliant way to conclude the conversation and a message.
Thank you.
That let's enjoy the good times we have had and may they last in 2024 as well. Thank you very much, Manish. I'm very sure this is going to be one of our best shows. Thank you so much.
Thank you so much.